Not so long ago, I made a video on whether I thought this historic bull market will continue. And in that video, I was kind of going over the fact that investor sentiments have been a little bit too optimistic. Wealthy investors see nothing that will stop this relentless bull market. And I was wondering whether it would stay that way. Now, even just a few weeks past, on 19th of February, the U.S. S&P 500 reached an all-time high. And within the last couple of weeks, it has all just gone crashing down. In this video, I'll be exploring the two main reasons of why the market has just come crashing down and what I personally plan on doing during this situation. So the first reason is that the oil price has just completely plummeted within the last couple of days. And for one trading day, the oil price has gone down by around 30%. And it has since gone back up a little bit to just above the $30 US mark. So what has caused the drop in the oil price? And there are a couple of different factors related to this. And the main one is the fall in demand of oil due to the sickness that shall not be named that's been going around for the past wee while. Because of this fall in demand, OPEC, the biggest oil producing nations, has suggested to Russia that they should decrease the production of oil barrels per day by 1 million barrels in an effort to stabilize the energy price. But Russia is like, no thank you, we're going to keep on producing oil. So Saudi Arabia, which is the biggest oil producing nation, decided that they are going to slash the cost of oil and also further increase their production. So effectively, we got a price bidding war going on. And the result of that is that there are more oil being produced. There is less of a demand, which, if you know basic economic terms, it means that the price will get driven down. The second reason of why the market has just crashed recently, of course, is the disease that's been going around, which shall not be named. The World Health Organization, also known as the WHO, not to be confused with the WHO or Doctor Who, even though I'm pretty sure the World Health Organization has plenty of doctors in it. They have upgraded this illness that's been going around into a pandemic. So a pandemic is more of a geographical identifier for the disease. It basically says that the illness has become something that affects multiple continents. Now, this makes it more serious than an epidemic because an epidemic is considered as a rapidly spreading disease or illness, but usually localized within a country or a particular community. The last announced pandemic has been the H1N1 flu that's been going around in 2009, and that has affected several hundreds and thousands of people with many, many more deaths. Now, for this particular illness that's been going around, there has been more than 100,000 cases worldwide and more than 4,000 deaths so far. And there's been severe disruption to industries, mainly focused on tourism and hospitality. The stocks of casinos and cruise ships have all just tanked completely. Italy is currently on lockdown and they are shutting all stores apart from groceries and pharmacies. The U.S. president has announced the suspension of travel between the U.S. and Europe, excluding the U.K., for 30 days. And this has caused a massive drop in the stock market futures. The NBA has suspended all the games until further notice because one of the players has been tested positive for the illness. As a result of all that, the Dow Jones Industrial Average, which is the 30 biggest companies in the US, has officially hit the bear market mark, which is 20% down from recent highs. This officially ends the 11-year bull market run of the Dow Jones Industrial Average. The US S&P 500 and the tech-focused NASDAQ index is sitting on 19% down from recent highs and is expected to drop further, and it's likely to signal that we have officially hit a bear market. This is actually a relief in some ways, because now we can stop people from talking about how the record-setting bull market is going to end, because it has pretty much come to an end. Let's talk about my investing plans through all this. Now, I have been investing consistently in index funds as the market is dropping. I have no idea where the bottom of the market is or where it will be, and I don't think I'll be able to predict that. So I'm just going to average down the cost of the index fund. I'm personally not going to be picking individual stocks at the moment, because any bit of new news could easily send a stock tumbling. And what we have at the moment is a market-wide sell-off. So it's quite difficult to find an entry point. Now, if you're looking to pick up some value, you might want to look into consumer staples or healthcare, which are traditionally stocks that are less affected during a recession, because people will still need toilet paper and other general goods, and people still go to see the doctor. Overall, there's a lot of emotional trading going on at the moment, because people are uncertain of what's going to happen. So if you are looking to invest or buying into a stock, be sure to not be overly emotional and affected by all the news that's going on. In future video, I'll be talking about bear market, recession, and depression, and how long do these typically last, and what we can learn from the past bear markets. So I will see you in the next video.